with you with the area of ABFM. Acha everyone, till now, what have we finished off? We are done with the entire area of the um, module A completed. Module B, till the module B, what are we done with? Till if we talk about module B, we are done till the area of sources of finance, all sorted. I think in the last class what we did was sources of we did the area of leverages as well, है ना? Leverages is also over. What next are we going to talk about today? It is module B, capital investment decisions. Everyone, I told you in the very beginning itself that this chapter is very, very important. Reason, this chapter is the base for module C, many chapters, not one, not two, but also for module B, the next chapter as well. If you have done this chapter well, then that chapter is also in your hand. So technically you will have to do this part properly, otherwise it would be very difficult for you to understand the further points. So let's talk about capital investment decisions, everyone. When I wanted to buy my car now, I think I went to multiple areas. I had to go to multiple areas because I was getting a car, and a car which I'm going to use for not 1 year, not 2 year, not 3 years. I was supposed to use it for so many years, you know, isn't it? At least 10 years normally. If I get a specific car, then I'm going to use it for at least 10 to 12 years, right? So when we are going for such a thing, how are we going to work, everyone? Matlab, I have to make a decision now. But how will I make a decision? Shall I just go for a specific car, maybe because the car is of 8 lakhs, maybe the car is of 12 lakhs, the car which has a lesser price, I should go for this rather than going for this. But maybe this car has more engine capacity, well, this might have a little lesser one because the price is less, so then they have given lesser features. But this particular car might be having a lesser average, but this car might be having a greater average. This happens, right? So if I'm looking for my business, what will I do? Even if the engine capacity is good for the 12 lakh car, might be going for the 8 lakh car. Reason, the average is more. In my business, it is very important that my cost is recovered. So if I want to recover my cost, I will have to reduce the cost further. So technically, when we talk about capital investment decisions, matlab, think about it, everyone. Before buying a car, even I was thinking about average. I was thinking about the model. I was thinking about the accessories. Rather, I've just talked about hardly a few things. I think when we are buying a car, there are other things that we take care of. What is the amount of EMI that will come up? And if I'm paying the down payment, what amount of down payment I'm doing? Matlab, if I'm buying a car, I'm going to do this. If I'm buying a phone, I do the same level of homework, don't we? If I have to buy a phone, I just don't go randomly. Aaj, I'll just buy the phone. We're going to look into the future. We're going to look into the features of that particular phone. This particular phone should not be an older one, because if it's an older version, then after a few years I'll still again have to go ahead and change it. So whenever I buy a phone, I'll have to make sure that my phone should be as per the current scenario. It should be of the latest. The latest models are required, because if I have the latest model right away, then I won't have a problem in the next 2-3 years. That particular phone is good to go, right? So that kind of clarity now is required when I'm buying my personal assets. So think about it. If I'm buying a machinery, I'm buying a particular, I'm trying to introduce a specific plant that will increase my utilization capacity to a major limit. I'm trying to maintain my books of accounts. I'm trying to increase my returns. So when I'm thinking about all these things, everyone, can I be blind about it? I just can't be. How am I going to work? Basically, in terms of capital budgeting decisions, what are we doing? Under the capital budgeting decisions, we are making sure that the organization decides how is it going to buy those assets, at what price are they buying those assets, and how these assets would be beneficial for the organization, and the returns of it. whether they're going to make some returns or it's just gonna be some random investment. Think about it, everyone. If I spent say 12 lakh for my car, do you really think I can come back and as soon as my car is out of the showroom, I'll say that, oh ho, I made a mistake, let's go back and sell this car again? No, once I've got the car, whatever happens, I will never get the same price, even if I've just taken it out of the showroom. That's the reality, right? When we talk about I've just bought a phone, I just opened the seal. At that very moment, nobody's gonna buy the same phone. Uh, Even he'll be thinking the seal is open, this must be a used one. It doesn't matter whether it wasn't used. So clearly, the value of the assets goes down as soon as someone understands ki this is just bought by someone else. I'm the second user. No matter you are the second user or not. So when we talk about this area, this happens. So when we talk about capital budgeting, they're going to talk about this thing. Ki sir, are we getting any returns or not? This is the point which is required in every business. So here comes the first point. What is the incremental principle of in investing projected cash flows? Acha, what do they do? If I set up a plant, what will happen? The very first thing that I'd have to think about is the inflows and outflows that I'm going to make. Uh, let's talk about it. Just a moment. I decided to start with my business now. My cash flows. I invested 8 lakhs. Say, in the first year, I received 1 lakh. In the second year, I received 4 lakh. In the third year, I received 2 lakh. In this case, over the next 4-5 years, I'm going to make some returns out of it. So first of all, I'll always review that I have spent 8 lakh. है ना? If this business is going to give me some benefits, only then I think I can look forward towards this area, isn't it? I will try to grow my business. I will try to look forward towards the uh, returns. All those things can happen only and only when we are thinking about um, the returns. So technically, this is the basic reason through which you can find out whether you are getting the returns or not, right? Let's talk about it. Separate the investment side from the finance side in terms of cash flows. Really? Can we do that? Can we separate the investment side from the finance side? If I take a loan or something, where would we put it? Then next is consider post-tax cash flows. Next, we consider estimate separately the cost incurred if the project is not run. Collate all components of cash flows. What am I going to do? Let's look at it. In this area, we have estimate the cost and incurred if the project is not run. Now, what do we mean by this? In terms of cash flows, when we're talking about the capital investment decisions, obviously I'm putting money into something and I always look forward to an investment and I'm always looking forward towards returns. Without returns, there is no fun. So we have to estimate separately the cost incurred if the project is not run. That means what is the amount that I have to incur as an operating cost when I'm trying to run this business. That's the first point that I'm worried about. Okay. Then what does the consistency principle emphasize in the estimation of project cash flows? Acha, everyone, if I start a business, then obviously I'm trying to find out. Actually, I'm not starting the business yet. Maybe I would have started the business. I'm just trying to increase it further. So one problem is that what is the particular thing that's going to happen in future? I have to be futuristic as well. Na? That means if I put 100 rupees into the business, how that 100 rupees is going to grow. Say, obviously it's not about 100 rupees, it's always like in lakhs or in crores right now. Then only the business starts thinking about the futuristic point of view. In the beginning, you are just putting the money into the business till the time you don't really make that thing work out, right? So what does the consistency principle emphasize in the estimation of project cash flows? Consistency in tax payments, consistency in discounting, consistency in financing, consistency in investing. Acha. Consistency principle. Consistency means same thing going on, है ना? Everyone, I used one method to calculate the true value of investments, or we utilize this particular point of it is called, what is it called? It is called time value of money. Just a moment, I'm writing it here. It's called time value of money. So if I invest money today, over the period of time, the inflation and everything else definitely reduces the value of the money overall. Or if I say it in a different way, if I put money in the present, if obviously in the future we'll have interest on it, then by the end of the year, what are we going to have? This is present and this is your future value. And if I know that after 10 years I will get 10 rupees, I will get 12 rupees, 14 rupees, 10th, 11th, 13th year. So what is the value of it today? Remove the portion of interest. You will get the present value. So we have to calculate the present value to find out whether, obviously I cannot anticipate what's going to happen in future, but I can see that at present, are we making any profit out of it or it is useless? है ना? So in this case, what are we going to do? We have to look forward towards consistency in discounting. है ना? So in this case, tax payments, financing, investment, these are basic things. When we talk about the projected cash flows, whatever method we are doing in terms of coming back from a future to the present, that is covered in this area. So technically, the answer here is discounting, consistency in discounting. Acha, what does the duration for which working capital is required depend upon? Long-term funding, operating cycle of the business, short-term funding or short-term financing, or fixed asset requirements. Duration of working capital. Acha, working capital is the money that is required in the business for for the entire period. That means every year we are trying to produce something. You know, matlab, say I produce a Rolls Royce. Normally, a Rolls Royce takes around 6 months to be produced. One particular car, they take around 6 months. So for 6 months, they're just putting money into it, money, 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 and then after 6 months, this is sold. So you receive your money after 6 months. So during this 6 months, you have to pay your selling, your people there who are working with you. You don't have to not only pay them, but you will have to also pay other areas as well. Who's it, everyone? You will have to pay for the working. You will have to pay the people for their overall, not only the work, I would say, you also pay for the electricity, you also pay for the water expenses, you also pay for multiple things, isn't it? If you're paying for the multiple things, what are you going to do? Where you will arrange this amount? Because it will take 6 months to receive back the money. You are using working capital amount, which is utilized during the operating cycle of the business. Okay, that's the answer. The answer is B, operating cycle of the business. Acha, another interesting question, longer question, but I would say a very beneficial question for you. Out of the following alternatives, methods of project evaluation and selection used in capital budgeting, which one of the combinations in the code corresponds to discounted cash flow methods? IRR, payback, internal rate of return, payback, profitability, or net present value? Profitability index, that is PI, and NPV. They are asking about the method which is used in the area of capital budgeting and alternative methods of capital budgeting and selection used in capital budgeting. Which one of the following is discounted? Acha. The core word here is discounted, everyone. The methods which are using and accepting the portion of time value of money. Okay, so in this case the answer is going to be time value of money. Based upon this, we have IRR is based upon time value of money, PI is also based upon time value of money, NPV is also based upon time value of money. So the answer is 1, 3, 4. This is not the answer, this is also not the answer, this 2, 3, 4, nay, there it is, 1, 3, 4. B has got 1, 3 and 4. So the correct answer in this area would be B, 1, 3 as well as 4, everyone. Got the idea? Okay, now let's move on towards the next question, everyone. Which of the following is not true with reference to capital budgeting? Capital budgeting is related to asset replacement decisions, or cost of capital is equal to minimum required return, or existing investment in the or project is not treated as sunk cost. Timing of cash flows is relevant. Timing of cash flows is definitely relevant, because if you are receiving the money over a longer period of time, that means you're going to receive more money, but the return should be good. If you're getting pennies and whatever number of years it takes, how does it matter? Then, so one point that is true is timing is relevant. Capital budgeting is related to the era of asset replacement decisions. Yeah, it is. Sometimes we're just thinking about changing a particular asset. I had a particular asset which was in use. I can actually think about repairing it further or buying a new asset. है ना? I have a car. I'm using it for the last 8 to 10 years. So in the last 8 to 10 years, I'd been using it and I realized that the repair cost is increasing. So shall I get it repaired again, or shall I buy a new car and get rid of this operating cost which I'm incurring every single day? है ना? That is, you are thinking about this part. The capital budgeting is related to the asset replacement decision. In this case, this one is correct as well. Cost of capital is equal to minimum required return. Again, this is the point where everything will turn out to be positive. If I require 10% and the asset is giving me 10%, cool. This is where I will accept that particular offer. Otherwise, why will I accept the offer? If it is more than that, then it is something that, like, I would say cherry on the top. Okay, I wanted this much amount and I'm getting that much amount. The last is existing investment in the project is not treated as sunk cost. Again, a true point, but it has one problem. Existing investment in the project, no. The point is, everyone, I already had a car which is worth rupees 10 lakhs. The worth rupees 10 lakhs is not relevant. The repair that I am going to do is relevant. Rest everything is irrelevant. So existing investment in the project is not treated as a sunk cost. This is wrong. That's a sunk cost. Sunk cost means the cost which is just like Titanic. It has sunk. Matlab, it was done earlier. It has nothing to do with present. We would be worried about the present when we are talking about present. है ना? That means if we are evaluating a specific course, we are evaluating a specific course of action that we are about to take. We are thinking about a business that we are trying to buy. All these things are true, but till the time we're not buying that particular asset, how can we look forward to it? And other than that asset, nothing else is important. Done? So the answer is existing investment in the project is not treated as sunk cost. Acha, next point. In the capital budgeting, the term capital rationing implies that no retained earnings are available, that limited funds are available for the investments, that no external funds can be raised, or that no fresh investments is required in the current year. In the capital budgeting, वैसे तो there is no point where we can actually say that there is no fresh investment is required. You might require fresh investments at any point of time. You know, there is no retained earnings are available. We're looking at the various assumptions. But this kind of question has been asked in the examination. And one more thing that we have to really worry about is these kind of questions are actually coming in the examination. What they do is they play with your mind. Now, the capital investment decisions is frankly the numerical chapter. But if such a question comes, what will you do? In the first case, that no retained earnings are available, we are not worried about this. Capital rationing is actually about, I have 10 lakh rupees. Where would I put it? Capital investment is basically where I put it, A or B or C. Am I putting in A, B or C? Where am I putting it? Now, in terms of capital rationing, you are doing the rationing part. That means A requires 2 lakh, give it to it. B requires 3 lakh, give it to it. C requires 5 lakh, and actually they deserve this amount. Not only requirement, we have to check now if I'm putting money, whether I'm getting the money back or not. That is what we'll see. So in this case, the correct answer is there's a limited fund available. So the first is not correct. Third is also not correct. Only the second point is correct. That the limited funds are available for investment. Which of the following equates the present value of cash outflows and present value of expected cash inflows from a project? NPV, IRR, payback, ARR, accounting rate of return, and IRR is internal rate of return. These are just the mini terms that we use. So everybody, what's the answer? Which one of the following equates the PV? Out of outflows and PV inflows equates. Acha, everyone. NPV says if your NPV, that is your present value minus your initial investment, is positive, then we accept, or otherwise if it is negative, we reject. So technically this particular thing doesn't really help us. This is not equates. Payback period is not discounted at all. It is not related to the present value at all. So this is also out of the league. Accounting rate of return is also non-discounted method. It is also out of the league. This IRR is the answer, everyone. How do we say IRR? In this case, your present value is equal to your initial investment. That is where we accept it. Okay? The answer is internal rate of return. So that's it for the day, everyone. I hope this session was helpful for you, and if it was, please don't forget to like it. Your motivation is something that keeps me going in the examination for sure. So when we are looking forward towards this series, we are almost at the mid of the module B as well. So please keep on liking as well as sharing this session. It is very important that more and more people can join in, and then I can come up with more and more such questions for your examination. And everyone, please go ahead and download the PDFs of the same as well, so that you can get something out of it now whenever you need for the examination. So everything is required in terms of examination. Whatever is required, basically I'm putting it up. Just do one part for me, that is prepare properly, and whenever you feel there is a requirement, then you can message me in the comment section as well. I'll be able to read it. Actually, everyone, let's talk about this area. If you're preparing for CAIIB, what you need to do is go into the area of CAIIB June 2024. At this point of time, our resolution batch is also out, as well as our CAIIB Mahapack is also available. What can we do right now, everyone, when we talk about this area? These are all the batches, Nishchay and Sankalp batches. Our resolution batch is also here. Resolution batch means all the 4 subjects, not the elective, but the 4 subjects. You have test series, you have ebooks, you have 400 hours of live classes. Just click on the area of buy now, use the code Y541, and as soon as you will apply it, you will get 80% discount. Why 80%? Use the app, you will get this 80%. So the code you can use is Y541, and you will be able to get it for 5039, and the validity is for 6 months. So if you're planning to buy this particular batch, then hurry up and buy it as early as possible. So that you can prepare properly. And my ABFM batch has recently started. That means you can review that particular batch. BFM has recently started as well for you, so go ahead and check it out, the classes there, and enroll yourself as early as possible, as the time is ticking away. So I'll be meeting you in the next class, and happy Lodi, everyone. We'll be meeting on Monday at